Jim Pinkerton is on the line with us. He was a former advisor to the Bush administration, regular panelist on Fox News Watch, Fox News contributor. Jim, what else? What am I missing from your bio here? I'm sorry, what I have is incomplete.
Well, that's all right. What I'm here in Tampa at the Republican convention to talk about the corporate income tax. I was interested in what you said in the previous segment. I'm actually the co-chair of a group called the RATE Coalition. That's Reforming America's Taxes Equitably. And since down here in Tampa, I've been having some fun. I don't know if you can see it, and I've got a red foam finger like you have at baseball games and so on. We're number one. That is, we're number one in terms of having the highest corporate income tax in the developed world.
In theory, we're not number one in actual tax collections, though. We're like something like 38 in tax collections, as you know.
Well, we are way higher than the OECD average, that's for sure. And the fact of the matter is that if American corporations face a 35% marginal tax rate when they think about new investments and they decide whether to move, you were saying earlier, right, corporations are moving overseas. The Eaton Corporation.
Yeah, these corporations, they don't give a rat's ass about America.
Well, maybe not, but what you and I care about Cleveland.
I care about America. I am a patriotic American. I will pay my taxes. I will keep my company here, and I'm not going to move offshore just so that my CEO can jump his salary from $500 million a year to $900 million a year.
Fair enough. But what do we do then about the fact that when I was born, back in 2 years after I was born in 1958, in 1960. The U.S. had 17 of the 20 largest corporations in the world headquartered in the United States. Now we have 6.
Wait, in 1960, you realized that 32% of the total income, the total federal income, was from corporate income taxes. Right now, it's 7%.
Right, and what's happened is the world has globalized, and it's now plausible for an American company to think to themselves, gee, do I want to be in Canada where the rate will soon be 15%? Do I want to be in the UK where it will soon be 23%? Do I want to be in Ireland where it's 12.5?
Right. So isn't it time for us to stop saying let's race to the bottom and start saying let's go back to what Alexander Hamilton proposed in 1791 that was adopted in 1793 and that stood until the days of Reagan, which was, policies that actually protect the U.S. economy. China's doing it. Taiwan's doing it. Japan's doing it. South Korea's doing it. Brazil's doing it. Brazil just passed a law that said that on any cell phone, any smartphone that's sold in that country, there was a 50% import tariff if it wasn't manufactured in Brazil. What happened? Foxconn, the company that makes Apple's phones, built a factory in Brazil, and they're employing thousands of people. Brazil, these countries are smart, and then here in America, we've got you and the guys of the Republican Party are running around going, oh, let's just cut taxes and have a race to the bottom. There's always going to be a country with lower taxes.
Well, the question is, do we want to be triple Ireland?
No, the question is, do we want to have rational trade policies?
Well, look. You asked me what I'm doing down here, and I'm doing this point on the corporate tax, and I'm saying that. For example, in 2000, your point about trade doesn't really speak to why corporate headquarters move around. In 2000, the United States had 179 of the top 500 corporations in the world. Now we have 133. That's not a trade issue. There's nothing stopping Company X from moving their manufacturing to China.
Well, most of these corporations have hundreds of offshore divisions to begin with. I mean,
when the corporate headquarters moves, the city, the state, the U.S. economy as a whole loses those jobs. And so I think you just have to realize that in 1986, when President Reagan and the Democrats in Congress worked together to cut the top corporate rate from 46 to 34, the OECD average was 50. Now the OECD average is 25. They've cut their corporate tax rate in half. And we have actually pumped it up 1 point back in the 90s.
But they're actually collecting that. GE is paying nothing in taxes. ExxonMobil is paying nothing in taxes. The vast majority, in fact, of American corporations pay nothing in taxes.
The rate coalition says that, look, in return for getting the rate to 25, we support whatever other base broadening measures might be indicated to get to that point. Look, we agree it is crazy to have some corporations paying in the 30s, which some do, and some companies paying 0. That's why we want
what corporations paying in the 30s?
Pardon?
I know of no American corporation that's paying in the 30s.
Some of the members of the rate coalition pay in the 30s.
Can you name one, please?
Some of our members, it's not a secret, but the Tax Foundation has said that the effective tax rate for American corporations is in the mid to high 20s.
It's 11%.
Well, no, that's percentage of revenues, but of federal revenues. If the effective tax rate...
No, 7% of federal revenues. I may be wrong on the number, but I thought it was 11%. Maybe it's in the teens, but
in any case,
it certainly isn't 35%.
If your argument is that every corporation ought to pay something, we agree. How's that? We agree.
Okay.
That's what the Rate Coalition, and the Rate Coalition is, Verizon, AT&T, Disney, Boeing. These are big companies. The National Retail Federation. Between the 27 companies and associations that we represent, that's 30 million people working in the United States. In the United States, and we're saying that yes, if you need to make the tax code more simple and clear.
You represent a group of corporations who want to write tax policy. Shouldn't we, the people, be writing tax policy?
Of course you should, which is why we're working with, for example, Dave Camp, the chairman of the Ways and Means Committee, Richard Neal, Democrat of Massachusetts, Bill Nelson, Democrat of Florida, Ron Wyden, Democrat of Oregon, as well as other Republicans, including Mitt Romney and Paul Ryan. Of course, it'll be a congressional thing. The Republicans in both houses of Congress have effectively endorsed this. President Obama himself, in the 2011 State of the Union address, said it is a problem that we have the highest corporate tax rate of the world.
I am not opposed to our dropping our top corporate tax rate from 35 down to 25% if we would start enforcing it.
Well, that's exactly what we're talking about. You should look at our website. I'm glad we're talking, Tom, because our website is ratecoalition.com, and this is exactly what we've been arguing. Again, our model...
But the larger point here, Jim Pinkerton, is that these corporations that are leaving the United States for the lower taxes, I mean, this is like, oh, no, look at this. They're moving their factories to Mexico. And then Mexico started getting expensive. Oh, no, they're moving to China. Well, now they're moving to Vietnam. Pretty soon they're going to be moving to Burma. I mean, there's always going to be cheaper labor. It's the exact same thing with taxes. There's always going to be a company. I mean, Mitt Romney's partying on a yacht right now off Tampa that is flying the flag of the Caymans because it's cheaper if you own a yacht to register it in the Caymans. I mean, there's always going to be that race to the bottom. Shouldn't we be putting in place policies right now that protect American manufacturing and American manufacturers, American companies that actually want to be part of this country?
I think that the reality we face is that capital is mobile. And I'll give you a great example of how this works in the real world. Okay, Sweden is commonly thought of as sort of a left-wing social democratic country. In fact, their corporate rate, because they know they're competing against all those other countries in Europe as well as around the world, their corporate rate is 26.3. And then they
collect it. We don't.
We'll get to that. Here's the punchline. So the finance minister of Sweden, a guy named Anders Borg, B-O-R-G, said, look, we got a problem here in Sweden because AstraZeneca, the big pharmaceutical company, is actually sort of Anglo-Swedish. It could sort of choose which domicile it wants to be in. And so if the UK cuts its corporate rate, as they're planning to do, down to 23 or 22, then the problem that Sweden will face is that AstraZeneca could then pay its taxes in the UK and create its cost account for its expenses in Sweden.
And that's the point at which you use policy. You say, well, that's fine. If you're going to domicile yourself in another country, then we're going to consider your products imports. And as imports, we're going to attach a tariff to them, and we are going to get that money one way or the other. If you want to make money off the Swedish consumers, if you want to make money off American workers, and you're going to try to avoid paying the taxes that keep America great, then we're not going to allow you to do that.
Well, you got a WTO problem there.
Well, let's pull out of the WTO. The WTO is insane.
Well, okay. I mean, Tom, politics is the art of the possible, and so what the Rate Coalition says is that here's one reform, repeat reform, and the title of the group is Reforming America's Taxes. And so we're saying, as a reform, let's broaden the base. Let's do what they did in '86, which is a lot of loophole closings, a lot of base broadening, a lot of extra revenue coming in from income that hadn't previously been taxed. It's the model of the '86 Tax Reform Act. It was also the model applied by the Simpson-Bowles Commission, by the Rivlin-Domenici Commission, by the Gang of Six in the Senate, which is a bipartisan group.
But for 35 years, as a consequence of Reaganomics, as a consequence of these tax changes that Reagan did, although he did raise the capital gains tax up to 28% for 1 year, But nonetheless, as a consequence of all these things, what we've seen is that, for 60 years, productivity has been steadily increasing, but ever since Reagan, wages have been flattened right out.
I think there's a lot of productivity I see going on in this country. I see a lot of good stuff happening, but
that's my point.
We want more.
But yeah, okay, Jim. We've run out of time, so we'll leave it at that. Jim Pinkerton, former advisor of the Bush administration. You're there at the RNC working with the Romney administration. Thank you, sir, for being with us.
Thank you.